Hi, we continue shaping US stock market history, and today I'm going to explain why in the past 12 sessions Apple lost $77 per share adjusted pre-split price. That's correct. Apple in 12 sessions lost $77 per share pre-split adjusted price. The reason for this, it is related to my downgrade announced on the blog of the company stockmarketlive.tv, and that announcement was made in real time. And so if I'm the person we called the bottom in Apple, if I'm the person who called the crash in Apple 2 years ago, I believe that if I downgrade Apple to neutral, investors had to do something about it. And so, in the past 12 sessions, Apple lost $77 per share, because I've been here since the very beginning, shaping US stock market history. So let me make you this question. How many of you consider that Apple will lose $77 per share after Goldman Sachs raised targets when shares they were trading at $130? None of you. How many of you consider that Apple will lose $77 per share after Mr. Carl Icahn tweeted all over the internet that Apple was severely undervalued, worth more than $200 per share? None of you. So we use those facts or events to unload our position on you, and by unloading on you, we saved $77 per share, which in our case, our customers, corresponds to a huge amount of money. And by doing so, and also betting on, meanwhile, selling short the stock, we increased profits by trading the stock Apple instead of maintaining a long position and giving back $77 per share in profits. So I demonstrated once again that our strategy works 100% of the time. But more important than the correction that you have seen in Apple, and you have the shares trading at $122 on the screen, more important than the correction, more important than my call downgrading Apple to neutral, it was that the fact that meanwhile in the US, Dow Jones plunged, S&P plunged, and the tech sector plunged. And other calls they were made. Other calls such as, for example, the recent one in Amazon at $388, downgrading the stock to neutral, shares are down $22 per share, which is significant since I'm the person we called the bottom in Amazon at $285. So those that they have been buying stocks on Wall Street upgrades or selling short on Wall Street downgrades, all of them, they are losing money. So the only thing that you had to do, it was to follow the free recommendation that was available in our blog, to sell your position in Apple and to go short the stock. Otherwise, you gave back important profits, and all this was accomplished in a company, the #1 company in the world, and after the company reported blockbuster earnings. So earnings, they don't matter, because who shapes the stock history of these companies? It is not Goldman Sachs, it is not Mr. Carl Icahn. And that is a fact that you have to learn. And today we made the top 10 Nasdaq gainers, where Cons, a company which I addressed on the website, stockmarketlive.tv, announcing the bottom, $14.70. I bet on the crash on that company. I announced the bottom, and that company today gained 15%. And in the past couple of months, shares of that company are up almost 100%. So, if I say that there are better opportunities than Apple in the stock market, maybe you had to listen. I think it is pretty simple. So here you have the downgrade Apple to neutral, which was announced live on the blog and gave you plenty of time to profit from this important correction that you have seen so far with shares at 122.25. And once again, consistency is the most important quality characteristic that we have been here demonstrating for 20 years in a row. So we proved that we are the leading company in this industry. And no matter whether Mr. Carl Icahn, who is the same investor who invested in a company called Transocean ahead of a complete meltdown, or Goldman Sachs, whether they were going to upgrade Apple to $5,000 per share, Apple always did what I said that the stock was going to do. So if I said that Apple, it was a neutral, you had to listen. Pretty simple, fact, and we make decisions based on facts. And this is how money it is made in the stock market. Thank you.